Hi guys, welcome to my channel Mr. Trader. So today we'll be discussing about basics of candlestick pattern. So let's get into it. What is a candlestick? A candlestick is nothing but style of financial chart used to to describe the price movements of a stock, derivative or currency or commodity. So it is nothing but a representation of the price movements in simple words. So this is a candlestick. This is the body and this is called the wick or the shadow. So this is a bullish candlestick in which the price opened at this level, made a high at this level and a low at this level and closed above the open price. So it is a bullish candle when the closing price is above the opening price. So similar to this is a bearish candlestick. In this what happens is it opened at a higher price, made a high and then a low and then closed at a lower price which was lower than the opening price. Okay, now let's get into the types of candlesticks. So these are the main candlestick patterns. So the first one is doji, the second one is bearish and bullish engulfing, hammer and hangman, inverted hammer, morning evening shooting stars, Harami and Marubuzo. So let's get into the first type of candlestick pattern, which is the doji. What is a doji? A doji is nothing but a candlestick that is formed when the opening and closing price is the same. That is, there is no body in it. It has just a wick above and below it, and it does not have an actual body. So this is called a doji. So there are again in doji there are four types. One is a neutral doji that is shown in the left, this one, and then there's a long-legged doji. In this what happens is there are extreme price movements up and below, but then it couldn't sustain at those levels and it had to close at the same level where it opened at. This is called a gravestone doji. In this what happens is the price went up, it spiked up, but it couldn't sustain at that level and it had to come down and closed at the same opening price. Whereas on the contrary of this, there is the dragonfly doji. In this what happens is the price opened, it fell down, but it couldn't sustain at those level, and due to the buying pressure it had to go up and closed at the same opening price. So let's take a few example of these, the live market examples. So this is the bank nifty chart, and I just made a note of the normal doji that is at 7. Yeah, at 429. Yeah, yeah, so this is a normal doji. It has a small body, I mean it has no body and it has a small wick. And then a long-legged doji is this one. It has a relatively bigger wick or shadow compared to this one, and it's a long-legged doji. And coming to the dragonfly and gravestone doji, a, a dragonfly doji is this. It has a small upper wick, but it could be neglected. So in this, what happened is it tried to go down, but it couldn't sustain, and it closed at the same opening price. And a gravestone doji, just a sec. Yeah, yeah, you could say this is a small. It has a small upper wick, but still, it could be called a gravestone doji. So what happens in a doji is it means it is a start of a consolidation zone. It maybe the next candlestick could be a trending one, but what it means is the next few candles will be in a consolidation zone. It won't move up or down, it'll go sideways. That's what a doji means when you see one. Whereas the gravestone and dragonfly doji mean that it could be a reversal. because it tried to go in one direction but couldn't sustain and had to close in the same opening price. The same for the dragonfly. It tried to go down but it couldn't, and it had to close in the same opening price. So these two mean that there is a chance of a reversal, whereas a neutral one means that it is maybe entering a consolidation zone, but again it is just a assumption. So let's go to the next candlestick. Next one is a bearish and bullish engulfing. So as the name suggests, bearish and bullish engulfing is nothing but candlesticks which engulf the previously formed candlesticks. So as you can see, this bearish as in the opening price is higher than the closing price. So this opened higher and closed lower. So this whole candlestick is engulfing this previously made candle. So similarly, a bullish one is nothing but a bullish candlestick which is engulfing the previously made candlestick. And let's take a live example. Okay, so what it means, okay, I'll just show you the live example. Let's go to the 5 minute. Yeah, yeah. So this is the bearish engulfing. So as you can see in this candle, this one, this is engulfing this previously made candlestick. It opened at a higher price compared to the previous candlestick but closed lower than both of them, this candlestick as well as the opening price. So this is a bearish engulfing. Coming to the bullish engulfing, just a sec. Yeah, well, this is an hourly chart. So this is a very good candlestick because as you can see after this, it's just a upward trend. So this was the candle which was previously made. It opened low, but then it closed above the previous candle as well as the opening price of this candle. So what can we infer from a bullish and bearish engulfing candle is when these candles occur, it means it's a strong direct one directional movement. So if you can see a bearish engulfing, you can assume that the market might go down, and when you see a bullish engulfing, you can assume that the market might go up, like how we saw in this case. Once this was formed, it was just a upward movement till here, unless after till here, you could say. So what it means is it's a strong one directional movement. Yeah, so our third type of candlestick is the hammer and hangman candlestick. So a hammer pattern is, since the name comes because the candlestick looks like a hammer with this being the body and a long wick. So what happens in a hammer candlestick is after a long downtrend, the price opens at this price and then goes down but cannot sustain, and it closes above the opening price. So what happens when you see a hammer candlestick is it may be a reversal pattern. So like after a long downtrend, when you see a hammer pattern, it may be a reversal of the trend. And similar to that is the hanging man pattern. So in this what happens is after a long uptrend, when people start booking their profits, the prices drop and then it closes at a price lower than the opening price. So this is a hanging man pattern. It may go down or it may go up, but basically what happens is there's a lot of sell off at this point, and that's why there is a long wick which is below the body and a small body. Let's take a few live examples of these two. So for hammer pattern, yeah, so this is a example, not the best example, but just for our understanding we'll take this as the hammer pattern. So after a sell off from these three candles, here what happens is it goes down but cannot sustain here, and then it closes at a price higher than this, and then as you can see there is a uptrend. Okay, and then for the hangman pattern, yeah, so what happened here is from here there was a good uptrend. Here many people started booking profits, and here there was a sell off at this point, and after this there was even a downtrend. So this is a hanging man pattern. Not the best one, but for our understanding, we can assume this to be a hangman pattern. And now let's go for the next pattern, that is the inverted hammer. So, an inverted hammer is similar to the hammer, but it is just inverted. So, in this, what happens is after a long downtrend, the the prices try to spike up immediately. It goes up, but because there were many sellers like here, it cannot sustain and it comes down, but then again it closes at a price higher than the opening price. So from here also we can assume that it may go up, but sometimes this can also be a continuation pattern, like there can be a downtrend again. So you cannot completely say that this is a reversal pattern, but it can be a precaution for us if we have taken any trades. Let's take a live example of this. Yeah, so this is a inverted hammer in which, see, as you can see, the price is opened lower but then closed higher, and then due to the long wick we can say that this is a inverted hammer. But as you can see, there was another candle which was in the positive, but then again it couldn't sustain. So you cannot completely rely on just this candle saying that it's a reversal. So but this can be a precaution for us, maybe a profit booking zone if we see this one. Let's go to the next pattern. Morning star and evening stars. So morning star and evening star is a combination of these three candles in which after a downtrend there is a doji. We can call this a somewhat doji, but it has a body, and then another positive candle that is a bullish candlestick. So these three candlesticks combined we can call them a Morningstar pattern. So in this what happens is there's a downtrend, then there's a reversal here. Yeah, so coming to our next slide, that is the morning star and evening star. So what happens in a morning star is after a long downtrend, there is a reversal in this case. So followed by a bearish candle, there is a small reversal bullish candle and another bullish candle. This is a small one which has a small body and small wick, whereas this one has a big body and small wick. So a morning star is, you could call it a reversal pattern, and the same is for the evening star. So in evening star, what happens is after a long uptrend, there is a reversal, and this this consists of a bullish candle, a small bearish candle, and another bearish candle, which confirms the reversal. So let's take live examples of these. Yeah, yeah, this one. So this one, after a downtrend, there was another candle, and then another bullish candle. If this was a green candle, these three candles, this one, and this one, these three would consist of a morning star. Let's just assume this to be a green candle. So uh, after a downtrend, there is a reversal of the trend. And for the evening star example, this one, after a uptrend, there is another bearish candle and a huge bearish candle. This could, yeah, these three candles, you could call them as a evening star. And after this, there is a downtrend. So we'll go to the next pattern. Next one is a shooting star. So a shooting star is somewhat similar to the inverted hammer. So in this, what happens is after the price go up, when this candle is formed, this is in this candle, what happens is the price spike up, but they can't sustain, and it falls down and closes below the open price, and we can assume that the trend is going to reverse and it's going to go down. So when we see a shooting star, it's another reversal pattern, and let's take live example of it. Shooting star. Let's go to the 15-minute. Yeah, so yeah, this one, uptrend, the price went up, the high was I think 22424, but then it couldn't sustain and then closed at 22333, and then it was followed by a downtrend, as you can see here. We'll go to the next star. Okay, a harami. So what a harami is nothing but when a candle is formed within the range of the previous candle. So this, you could call it as the opposite of an engulfing candle. In an engulfing candle, what used to happen was the candle which was being formed was engulfing the previously formed candle, but in this it is getting formed within the range of the previous candle. So a bullish harami is a candle being formed inside the previous bearish candle, which is green in color, and a bearish harami is a bearish candle being formed within the bullish candle. So what this means is, when you see a harami candle, what it means is the volatility is reducing and it is going into a consolidation zone. That means it is going in a sideways movement. So let's take few examples for better understanding. Just a sec, guys. Yeah, for this I really had to search because this happened like long ago, this type of candle. So yeah, this one. So as you can see, this is a bearish candle. So this was formed within this one. It's not as good as the one that is shown in the slide, but this is a live example. So in this, as you can see, it has formed inside this, and the next 2 3 candles are sideways. So when you see this type of pattern within the previous candle, it means it is going in a sideways direction. And for the bullish Harami candle, let's just have a look at this. Yeah, this one. This one has formed within this candle, and as you can see, it's a bullish Harami candle, so it's a green candle. But as you can see, it was somewhat sideways after this and these three. And after this itself, there was a huge up movement. So what we can conclude from this is that it indicates a sideways movement. Let's go to the next one. Yeah, Marubuzo. So what this means is when the open price and in a green Marubozu, that's a bullish candle, what it means is the open price is equal to the low price and the closing price is equal to the high price. So in this candle, it is opposite of a doji. In this, there is no wick or shadow, and it has only the body and no wicks at all. And this is a red Marubozu, or the bearish one. In this, the open price is the high and the closing price is the low. So what these candlesticks mean is there's a strong movement. So when you see such a candle, it means it is a strong movement. If you see a green Marubozu, it means it is a strong up movement. So we can expect the next few candles to also be in the upward direction. And the same for the red Marubozu. So if you see a red Marubozu, we can expect the market to go downwards. Let's take live examples. Yeah, this one. Well, yeah, I think there's a small tiny downwick, but it is neglected. So this is a bearish Marubozu. So as you can see, after this candle was formed, it's a strong downward movement candle. So after this, there were two other candles which were down. And for a bullish Marubozu, this one. So as you can see, after this candlestick was formed, it was just uptrend almost till here, you could say. After which, yeah, it actually, yeah, continued till here. So a Marubozu is a strong one-sided candlestick, one-sided directional candlestick. Yeah, so these were the 7 important candlestick patterns. And if you have any doubts, please put it in the comment section, and please like this video, share this video, and subscribe to my channel and press the bell icon. Thank you guys.